Okay, so let's have a look at a Bitcoin. This is 1 day scale. Now, what do we see here is on a 1 day scale, it is right in the middle. Middle of what? The consolidation. If you look at this low, and this was the first bounce, then what we clearly see here is consolidation in this zigzag pattern, maybe, and then I would draw this like this, and now it's heading up. So I'll stop here. What we want is we want this to complete this and then move up. This is what we're expecting. um, what we see here is clearly the previous resistance are a roadblock. So if you look at this resistance, first it was this amazing rise. I mean, this was very well needed. This is where I was thinking that this is like a decisive point where it could easily go down, could have gone down, and bit survive. If you refer last week's video, I mentioned that this is the point. There was one level here, and then I said this is the point, this is the point, and these are the 4 to 5 points I mentioned in last week's video, indicating that because this is a consolidation zone, you cannot just say this is the support where it will bounce. There are different supports, and now we see here is it bounced nearly from this region, and the good thing is it didn't break the May low. This was important point. So this was a bounce. Of course, some news also helped, but I would not say just it was because of news, but definitely helped, especially in this phase. So this is where it helped. Now again it reacted from S4.1, and again those previous resistance are playing their role. When it came down, it got a support. Also now it's consolidating near 4.2. So when I see here, I still consider Bitcoin is still under consolidation like this. And the positive thing is it is right in the middle and trying to bounce at this moment. What we don't want is breaking below this yellow line which I added yesterday, because it will change the balance. 34185 is the level I'm tracking. So if it breaks below, can it hit another low and in this region and go up? It is impossible. uh, as long as it doesn't breaks this lows, we should be fine. But to me, then the probability of lower low means lower than 29k 29k will go up if it breaks below this level and starts moving in this direction, because then usually that is what is observed. In that case, we'll have to prepare for lower one. At this moment we don't have to, because it's not in here. But this is a scenario. If it starts moving in this direction, I think this structure will likely to collapse. It's likely to collapse in that case, and then look for the lower low. And then sometime the lower low could be this much, it could be this much. So I think you have seen in ICP, we'll look in the ICP what happened. We'll talk about that. I don't want to mix up here, but ICP I'm referring because recently you have seen that it hit different supports, and from one support right now it is staying and spending most of the time and gave more good bounce. This is just for reference that how coin behaves, hit support by support, and then one fine support will provide the required bounce we're looking for. And this is true for short term and this is true for long term, right? What differs is the timeline. Okay, if the asset is good, the asset in a long run continues going up. Okay, like if you look at Dow Jones index for last 140 years, 130 years, it has been going up, right? But there were recessions, there were corrections, and so on. So those phases, those time periods were definitely bad for investors, for traders. But if you look at that huge time horizon, it's moving up. Similarly, Bitcoin is moving up for last 10, 11 years. But there are phases. So some phases are cycles, you may say, or where you see a bear market which could last for 1 year, 2 year, some bear market or bear trend or counter trend, I would say. In this case, a counter trend is for few weeks or couple of months or 3 months in this case, and so on. And if you look at this move, this is consolidation. So different time scale, different phases as part of different cycles. But the point I was trying to make here is that price hops one level to another, and then as a trader, and again investor and trader, I don't want to get into that. For me, my definition is very different. Investor and trader is just a difference of time horizon. Nobody buys something to keep that asset forever. The only difference is the time horizon. Trader, we call trader where there is more frequent in and out, more frequent buy and sell. And the investor who does, I mean, investor would also do buy and sell, but not as frequent. So to me, the difference between investor and trader, um, just a difference in holding time. Both have the same intention, making money. Okay, they think the money investor usually look for the value, and they have longer period, they have more risk appetite in terms of um fall. Like for an example, this one trader would have gotten out, investor would have stayed. For example, in crypto we call hodlers, right? Those are investors, and traders who would not look for longer term, who would look for a few days, few weeks, or it is not about it. Their intention is to remain um, relevant to the movement. Now, it is not about what is right or bad. I do both. So it's not about choosing one or another. So I think we're looking into Bitcoin, but I'm touching this aspect. I always touch base something which is different than just TA, and share my point of view. And today I just have I'm talking about trader investor for a reason. Now, if you're looking for, so you can be both. And I personally, I'm holding Bitcoin, for example, for longer term, and this kind of a move will not affect my investment. um I'm in support of Bitcoin, I'm in support of crypto. People, sometime I tweeted today, a few minutes ago I tweeted those tweets. Sometimes people don't digest or don't understand, and they think that I'm against Bitcoin, but they don't get what I'm trying to address here. So I'm pro Bitcoin, I'm holding Bitcoin, and but so as an investor, and I'm also a trader where I want to keep some money fluid, where I want some opportunities. So because for an example, if Bitcoin, if I have 100% money in Bitcoin, then whatever Bitcoin is doing for last 4 weeks, we have to just accept 3 months doing nothing. There's no value. The advantage of being a trader is you can get out, and then you can get out and buy something which is rising. Now, of course, you have to understand which is rising and when to onboard and offboard. So there are always pros and cons. So there is no the one method which will, or investment approach which will say everything is good about that approach. So when you're investor, what the plus side is, you don't have to look into all these corrections, interim corrections, and then you stay focused as you keep it for multiple weeks or multiple months, on depends on time horizon. But if you're a trader, then of course you will make in and out more frequently. So but you can be both. So for an example, you can have 50% or 60% money as an investor, 50% or 40%. The percentage would vary, it depends. You can keep 70/30, you can keep 50/50, it's up to you. But you can be both. And that's individual decision. Now when you're a trader, when the risk is raised, many people don't pay attention. Now if you're a trader, you have to be agile about, and you have to be reflective about all these alerts. Alert doesn't mean that you sell all. Alert simply means that there is a potential downside and you have to prepare for it. If you don't have stop loss or exit plan, you must have it. So when the alert was raised here, right, when it was not able to break above, first alert was at 62K, and then nice bounce, and when, but we had another condition over here. And when this particular move, when the alert was raised, now it is not that here, when you're here, you cannot tell what is going to happen here. But we talked about scenarios. So as a trader, if you're an investor, you don't care because you have longer horizon. But if you're a trader, when there is a potential risk, you have to have a plan in place, exit plan in place. And that exit plan, in my opinion, um, has to be about levels and multiple exit entries, not one. Because as you know, one entry, you cannot just conclude that it is going to die. So if alert is raised, you have to decide at what different levels I'm going to reduce my positions, by what percentages. That must be known to trader. Okay. And I think this is true for investor also. For an example, if I zoom out, so I was talking about being a trader here. When the alert is raised, how you can reduce incrementally. And I can extend the same thought. Let's say we are here consolidating. We want Bitcoin to go up like this. But as I said, if the critical levels are broken below, right, then it could go for downside as well. Now, how deep it will go? As I said, it will hit support one after another. And there's always one support which gives bounce as long as asset is good. If the asset is really bad, means asset is like worthless, then of course it could go up to zero. But we are talking about Bitcoin, where that is unlikely to be the case, where we think that it can go down, but there will be a stage where it can bounce, right? But yeah, I mean, I don't want to talk about being zero and being very less, because that doesn't make sense to me at this moment, right? There is no scenario here. So if you are a trader, then you will think, so if let's say we think that this is not going to go up but starts moving down for some reason, you got to have a plan. Say, I'll reduce my position by X percentage here, by Y percentage here, by Z percentage here, and so on. You must have your plan ready. Okay. um and with that, you don't regret about holding that position and the downside, because we as a human, if we don't buy enough price, enough asset goes up, we regret for not buying enough. Okay. When asset is here and it goes down and keep going down, then we regret about not selling that asset. So the problem is, we talk a lot about past, and usually it's more about regrets. And I always say, and last night I commented, why you talking about past? Fine, I mean, you can talk about past, but who is talking about future? Who is talking about the plan? I am not seeing that. What I see is more retrospective comments saying, oh, I should have gotten out and all. But how about talking about a plan that, okay, you know what, my plan is to get out at this level by this percentage and so on. If it goes up, my plan is to add this many position and then ramp up and so on. I'm not seeing this kind of conversation. It's not a criticism, but what I'm saying is that will show that you got a plan in place. Otherwise it's just a regret. And definitely on opportunity channel, I would like everybody to be more like a trader than a speculator, right? Everybody should have a plan. So what I was saying, as a trader is not going to close their eyes and keep seeing things. Okay, trader must have a plan. And when I say trader, it's all about short term plan. When I talk about investor, the approach doesn't change. The only change is that the risk level is different. The decision making has the process is the same, but the levels are different. So let me zoom out and show you what I mean. If you're an investor, people think investing means blindly hodling. It's not like that. Of course, there's always, it's very individual decision. Let's look at this wave and depends. So let's hypothetically, you are very good and you entered here somewhere. Here it's very difficult to enter. I had entered here, but point is, let's say you enter here 5,000 level, for example scenario. Bitcoin is here, you're investing, you're hodling, right? You don't worry, you don't even care if it goes down up to 20k and so on, right? And even if it, you can have even higher tolerance, right? Even if it comes down all the way to 13k, you're not going to be worried because you're still in profit. Now take another scenario that someone actually bought here at 18k. Now Bitcoin is here. Let's hypothetically say the Bitcoin goes down and come near 20k. If you are 18k, you are not worried here because you are in profit. But if it comes down to 20k, you cannot just close your eyes and ignore what is happening. So you are investor, you bought at 20k, sorry 18k in this scenario, and since November you're hodling, and Bitcoin is here, and the scenario is Bitcoin comes down to 20k. As an investor, you're still in profit, being at 18k, like entry at 18k. So you're not worried about that. However, you cannot just close eyes as an investor, say it's 20k and I don't have to plan anything. No. What if, again, this is a hypothetical scenario. I'm trying to explain the trader's mindset and the investor mindset and the crypto community's mindset. General, I don't want to say all, but most of the junior, most of the novice people. I'm trying to distinguish how I'm thinking my thoughts, that how people could think differently than other. I mean, again, I'm presenting my justification here by my approach. So some of you just joined, but I think I'm recording this, so you will I won't be able to repeat. You will watch it later on. So I'll continue. So if in this scenario anyone who entered at 18k would not worry, but if price goes down up to 20k, he or she cannot just keep eyes closed. So even the hodlers need to think about it, because if price goes down, again a hypothetical scenario, goes down and goes below 18k, it is not a wise investment to hold that asset. It's not about Bitcoin, it's about an asset, it's about an investment. Because you are an investor, you are investing in Bitcoin because Bitcoin is promising. It's not about a Bitcoin being special. Bitcoin is special for social reasons, some political reason, and financial reason. There are two different things. You support Bitcoin, right? You support Bitcoin for good causes, for good reasons. But when you're investor, you are a different person. When you're a trader, you're a different person. I think I want to distinguish, because people get too much emotional about an asset. Okay. And it's very hard. I mean, it's usually the case when there is lack of understanding. um if you are an investor, the goal is to make money. um and somebody says the Bitcoin is the money. Fine. If Bitcoin is the money and Bitcoin is going to rule the world, then you hold Bitcoin until, I mean, up to the eternity, or wherever, like endlessly. But that's an assumption. Investors do not assume anything. Their decisions are based on reality. So if the Bitcoin becomes world currency and Bitcoin is become the currency, it will not die. So even if you hold it, you are not in loss in a long term. But you have to think from an investor point of view that you cannot just assume things. Another thing, very important scenario that I said, many people in crypto are young. But think from a person who doesn't have extra cash, doesn't have liberty. So for an example, you have to spend money for your monthly expenses, and if you have everything in Bitcoin and Bitcoin goes down, then how would you pay your rent and so on? Another scenario, if somebody who is elderly and think that he or she would put everything in Bitcoin and assume this is year 2018 month January, and my pension fund is in Bitcoin, and my everything is depends on Bitcoin, and the market goes down. I'm not saying it's not about Bitcoin, I'm talking about any asset. If you have investment in that asset, and if asset goes through correction, so this why I'm emphasizing this, because correction in crypto is not for a month or 2 month. It goes on for a couple of years, as we saw. So anyone who is elderly put a lot of money in crypto, how he or she will get money for their expenses if an asset goes down by 60 to 90%. So my point is, we cannot judge, we cannot have a strategy, same strategy, we cannot have same strategy for everyone. If it has to be decided based on how much person is having cash, extra money, how what is the financial requirement of that individual, whether getting retired or whether he or she is a single earner, makes a lot of difference. All these factors are important factors. So point is, the investors would have different background, investor would have different financial goal, investor would have different risk appetite, and so on. And each and every investor needs to have their game plan, right? We are talking about different scenarios, so we try to cover different investors, so without pointing anyone or saying this is right or wrong, we are taking scenarios, and I'm sharing my thoughts for different scenarios. That if someone has bought 18 at 18K, if I bought at 18K, if I see Bitcoin has a further downside risk, I'm going to get out of it, the Bitcoin. It doesn't mean I don't like Bitcoin. It simply means that I don't want to bear my, I mean, the potential loss, because that's not my plan. I need to preserve my capital. I'm not doing in and out. I bought it here, I held it, but now what? Taking a U-turn and going all the way here, I just cannot keep seeing that happening. So I have to get out. Being an investor, as I said, if I bought at 5K, I wouldn't worry even if it comes down to 10K, 7K. But point is, so it also depends on when you entered, right? It also depends what you want from that money, how much money you put in. If you put 5% of your total capital, and if you have entered an 18K, right? And if price goes down, you don't worry because your money is at 5%. So you can say, okay, even if it goes down even further a little bit, then I'll be losing out of that 5%. See, the difference is even how much money you have put in crypto could change your decision. So you see what I'm trying to say, based on age, based on what is the financial requirement, based on when you enter, means how much profit you have so far, based on how much total percentage you have allocated for crypto out of total asset you have to put all together and say, what is my game plan? Okay, you and nobody's asking question about all this, and that makes me worry. What I see here is, when I say worry, it's not that I'm taking personally, but I'm ultimately human being, right? It's not that I will just keep watching. I would have my reaction, and this is how I'm conveying my thoughts. That I see more comments about regrets, and I see almost no talk about planning. That's the topic I'm touching. I wanted to cover in this session. I would like to see people talking that I'm going to buy this asset when it reaches to this level. I'm not saying you share your private information. What I'm saying is at least show that planning, that I want to increment my coin X by this much when price reaches this. But if my coin goes down by this level, my plan is to reduce by this much. I would like to see those kind of discussion, because that means you're thinking. That means you got a plan in place. That means you have a strategy in place, right? Oh, I should have gone exited. Oh, I should have entered. I see more like those comments. So I mean, just a feedback. Again, it's not a criticism, but I would really like everybody to strategize their game, because in when you're investing, you have to think from all point of view, downside point of view, upside point of view. You got to have a game plan. I'm not saying you should share, but when you comment on regression, I mean regrets, and all those frustration, I would rather you talk about your game plan. That is more going to be healthier. And I'm here if you have asked, not in a financial consultant, but a scenario based, mm, you know comment can be made, and I add my comment, and whatever I said, I think it will help, especially those who are not thinking that way. I don't want to generalize that everybody's like that, but there are majority of the people I see do not have a game plan, right? So this is the topic I just wanted to cover, not something I planned, but I ended up talking. So the couple of things I mentioned about trader and investor, the only difference is the time horizon, right? The traders are would do in and out more frequently. Investor would try to keep, but both have the same goal, that is about making money. Remember, nobody invest for just for investment. No, nobody in if I would be surprised if someone says, I'm investing in Bitcoin because of social cause, because Bitcoin is going to change the world. People invest because to make money. That's a reality, no matter what they're saying. Okay, maybe there are some exceptions, but point is 99% of the people would be in crypto for making money, as simple as that. If tomorrow they come to know from a source, let's say hypothetical, that the Bitcoin is going to die, not just speculation, a definite death, I would be wondering how many people of those, like how many of those who are hodling are really end up hodling. So the point is, we are not criticizing their belief system. What I'm saying is, if you're an investor, you have to be honest that you are investing because to make money. Okay, and you got to have a game plan, right? And I don't think people should regret about that decision. Anything happened in past, you have to leave behind the past. If you think about past, it will not let think forward, and think from here on. If you have lost, you cannot recover that lost. But if you think about your loss, you may affect your judgment in present, and may end up making more loss potentially, because you are clouded by past, you are affected by the past. So I would say press a reset button. If anyone has lost, say I lost 50%, okay, then start a day one, say this is my day one, and start. Now when you start again, the same thing. Bitcoin is here, if you look at it, it's moving sideways. Okay, Bitcoin hasn't reached to the safe level. There's no absolute safe level, but this is 48k is a safer level probabilistically. Okay, and it has to climb up a few levels above for it to be safer. At this moment, this is consolidation, and if you look at it on a weekly scale, Bitcoin is just saying I'm surviving, I'm breathing, but nobody can say Bitcoin is rising. Okay, Bitcoin is able to, you may say in a positive way that it's gathering energy. You may say that it's consolidating, and it is consolidating. There's nothing negative about what we are seeing here. But anyone who thinks that we don't need to plan because everything is good, I think you need to be watchful, and you got to have a plan. As I said, if you're in profit, if you think that no matter what it is going to rebound and all, it's up to you. I covered different scenarios. I hope that's enough. So from here on, we are expecting Bitcoin to continue bouncing, right? And that's what is happening. But you must have a plan ready for different levels. And simple strategy is you refer Bitcoin because right now Bitcoin is driving. Alts are not driving. Alts do not have their identity in terms of price action. That's another thing, that the each and every coin has its fundamental, but the fundamentals, what I call is intrinsic value of an asset. If you study, um, if you do stocks, you do, there are two types mainly. You study stocks from balance sheet point of view, from cash flow point of view, and many other aspects, which we call fundamental analysis, and those are tangible. That means when the quarterly result comes up, when the end of the year result comes up, we come to know what company is doing. Okay, and of course, whatever they share, people study and they evaluate and then find out what company might do in coming months or years, and that's how price is decided. So another topic is very important, and this is also missed out, that intrinsic value and price are two different things. Apple as a company has intrinsic value. Apple as a stock has a price. Both are two different things, and usually the price is higher. We measure in PE. If you're familiar, PE, price earning, we price slash earning, so price divided by earning. The earning tells about company's progress in terms of income and all, and price we know. So basically that ratio tells that how much more we are paying for that asset. So if I open finance.google, let's say, and see right now, we talk about Apple, right? So the Apple right now, the PE is 28. That means we are paying 28 times more than they're earning. Now think about this one. This is accepted flat. Now one can argue that you are actually inflating the price, and you are not wrong in saying, because PE means simply means your price is 28 times more than the earning. That means you're having a forward forecast that Apple will keep on doing good stuff and it will keep on growing. That's why paying more. And Apple, and then you accept it. Maybe 20 to 25 BE is okay, and up to 30 is okay. So you know what? So this is very interesting thing. Those who study fundamentals have even accepted the inflated price. If you just go by numerical number, 23 times earning is inflated number. Your stock price, the stock price of Apple is 23 times more than the earning, but you have accepted that it's okay. So the market is very this is very funny thing sometime, that you accept something which is inflated because you think from a relative term. For an example, if you look at Tesla, I'm not fingerprinting um, any specific stocks. Okay, the PE is 611. 611 times the earning. Now you are thinking Tesla is more expensive than Apple. So the discussion happened within fundamentals would be, oh, you are paying much more in Tesla, so Tesla is riskier. Of course, it is riskier because you're paying 611 times more than the earning. But reality is the Tesla share is also rising. Tesla, technically speaking, um, again, it's not a financial advice, but reality is Tesla share is rising, and I see upside move. For example, from my study point of view. Now, what does it mean that the fundamental is staying overpriced, but the technical is saying it could go up? And but even if you put aside technical and just compare fundamentals, Apple has 22 PE and Tesla has 611, but still both are rising. So you see, the price and the asset are two different things. I purposefully brought this point because inflated price is not just in crypto, but it is also in stocks. And if you ask me, the inflation of a price is million time more in crypto than its value. So you see, the reason why I brought that point is to compare the intrinsic value, that is your earning. You value the company, yeah. But if you value the company by market cap, the market cap, typically companies are valued by market cap. You see, the market cap is like all the shares available. Market cap of Tesla is 487 billion dollar, but that is because the price multiplied by number of shares. But this market cap is way 611 times than the earning, because so the price, ideally the market cap should have been less than $1 billion. You know what I'm saying? Because this is 611 times more. So the real market cap is still 611 times more. In other words, that means the price of the Tesla, actual valuation of the Tesla, is less than $1 billion. So the point is, in crypto, what we see here is only market cap, this thing. What we don't have in crypto is this earning part, E part, which that's why we don't have this number. In my opinion, this number is 1 million, or basically many. I'm not talking about Bitcoin, I'm talking anything that is not a product, that is not in use, that is not in transaction, has a zero value. So um, you can talk about prospect, but value wise, zero value. But the price is higher. Bitcoin has some value because it's being used, and the, at least there's investment and security, so it has higher value. Point is, the value could be different, higher or lower, but the price and the market cap is way higher than the intrinsic value. I hope I made sense. I just wanted to cover that topic as well. So fundamental analysis is not applied to crypto for all this reason, because we don't have the data as we have for stocks or any company issuing the stocks. The fundamental analysis in crypto is more about how many tokens we have, how much work they have done, in terms of like roadmap, how much they achieved, what all tie-ups they are doing, like all this collaboration that we see, all those things. So progress in terms of services and features and all. But but that is development work. You have to understand, all the fundamental analysis is all about development work. They are not in use. The real fundamental comes when it comes to use. That's my argument with anyone who says I'm studying fundamental of crypto. I say fine, but it's not a product. It's not in transaction yet. So actual fundamental analysis would start then, not now. What you're studying is a progress, and all. The token and all, I thought different topic. I don't want to cover that here because it's a lengthy topic. um, Also, it is a different topic as well. um, Anyway, so let me come back. So the point is, when the price move based on sentiments. That's my key point here about all this talk. The price, you cannot say this is the right price. This, you cannot say this is over price, because the over and under is relative, right? Are you willing to pay bitcoin at this level? If answer is yes, then it's the right price. If you think that this is pricey, you don't buy. It's always like that. If the bitcoin comes down to 2000, who says it's low and who says it's still good? It's always, see, as a community, as a group, as an investor, as a trader, we decide what is right. And whatever price we see, we think this is right. So in nutshell, whatever is the current price is the right price. Okay, that's our assumption. Because market is deciding bitcoin is at 35,800 right now, because it has to be at this price. When the situation change and the bitcoin goes up or down, market decides that this is the price. But you have to think that this price is decided by sentiments, not by intrinsic value. The intrinsic value will come, of course, when you see a country adopting bitcoin, or then there'll be real and intrinsic value, because the bitcoin will be in transaction. If El Salvador is a $52 billion economy, when the El Salvador start using it and the people of El Salvador start using it, then you will say that okay, bitcoin is in use for x million, y million, x billion, y billion, and so on. That's where the real measurement of a currency will come in. Okay, and then the fun starts. So I think it's going to happen, but right now, no one can say this is the right price. That's my point. So it's always depends. Coming back to the main theme, that it we have to decide whether we are trader or investor. We have to decide what is the right price for me to buy and what is the right price for me to sell. Okay, to a point of view, what I can tell you is what are the risk level, from where, if the price reaches at certain level, it would go higher from a probability point of view. At what level, if the price goes down, at what level it might go down, and up to what level. So for example, ICP we tracked very closely, right? And we saw how it kept on breaking below the supports, right? And what we saw here is, not on this chart, I think I have different chart, but it kept on breaking lows, I mean supports. But now we are seeing that it found a support here. Can I say this is ultimate support? I cannot say that, because this is similar to this also. However, we cannot assume that this cannot be the final support before a major move on the upside. Like, we did not know what would happen here. What we know is this is a support. It must hold this support, otherwise it could go down. Similarly, we know this is a support. So TA would provide support one after another. And this was also support. It We got a bounce. This was also support. Each and every bounce that you saw on ICP was a support. Even all this, and even this one. And if this breaks, I'll provide another support, and so on. So in TA, what you get is support levels, right? And what you get is resistance levels. And then you can say, if it is bouncing, what level will, you know, is likely to make the previous low as a bottom, and so on, and a potential top we saw for Bitcoin, and so on. So this is the typical scope of technical analysis which a TA could offer. But then the other aspects that I mentioned, that now you have this information, how you use this information for actual trading or investment is up to you guys, right? How effectively you plan, how much time you have, and how much money you should spend on what coin you should take. If Bitcoin is right now ruling, should you put more money for now in Bitcoin? If when the alts start rising, should I put more and shift the game? mm, if I have cash, should I put all the cash, or should I just keep some cash in crypto, and then rest I use for when the crypto breaks above certain level, and so on. All this thing is investors or traders decision. I have some guidelines that will help, but I think so if the information of all the analysis can be used for your planning, then yeah, you can have a higher you would have a higher probability to outperform anyone who doesn't have. So that's the summation, right? um, many people did not get the idea that this is a potential a point of bounce and there is no downside risk, and they shorted many traders. And in fact, the whole environment before this one, it's like that. In fact, still they are thinking it will go down, and we are not taking side. We don't believe in sides. So our work is very different. Our work is very different, and it is level based for us. So it's like that. If you are, like, you are swimming, right? Let's take a simple analogy. Up to knee level, you're not scared. If the water is rising up to knee level, you're not scared. If water is at your chest level, then it's scary. But if you're a good swimmer, you're fine. uh, but if it keeps rising, of course, you take necessary action and decide whether, even if you're a good swimmer, how far you can swim, how long you can swim. So even if you are a swimmer, but if the water level is rising, you may decide, I have to get out, because I know swimming, so I can survive swimming, I can float. But that has a timeline, right? You cannot live like that. And at a point, you can say, okay, you know what, I should get out. So simple scenario like this would also apply here, that it is about level. At a knee, if the water level is knee level, you don't care. So if there is a correction, you can say, oh, I don't care, and so on. And different risk level is, I mean, different level water level in my example is, would individual would treat differently as far as risk is concerned, right? So my analysis is based on levels, and that is agnostic of individual's plan. To me, it is more about direction, right, and a potential support and a potential resistance. So if you look at it, Bitcoin is following all this resistance high, this all this hitting all this white line you see over time and time, and reacting. Right now what you're seeing here is S4.2 is not letting Bitcoin go up, so it's a roadblock. It was a support here, it was a support here. Now it's a roadblock because it went down, it went below the support and so on. So I would not assume about direction. What I would simply think is this is right in the middle. In this consolidation, the wave that I drawn, zigzag, right in the middle. There's no need to think. I added this line for a reason. This is a line where it's again the water is at chest level, for an example, where you have to think about it. If you think that this is not a problem, and certain things that I mentioned about how much you're in profit when you entered, how much money you have, it all depends on that as well. That this risk level below, risk from not loss of value, risk below for a lower level. So I'll clarify the risk from a level point of view, not a risk from a money point of view. Of course, when it goes down you lose money, but it is not about say exit, it is about risk of breaking a certain level. So risk below this level means the risk of breaking this low is higher. It simply mean that. Okay, this is very important point to be understood here. So when, if it is here, fine, but if it breaks below this, then the probability of this low I mean the probability of going down is higher. And if it breaks below even this level, which was very critical level, then the probability will be highest. And it could bounce from here or bounce from here. This is the level I calculated, but I'll refine. If there is a requirement, I'll refine it and see what could be the next precise level in best possible way. I'll give that. But point is, these levels are not necessarily for your money management. This is another aspect. People ask about support, but you have to think about it, that even if it breaks below you, if you are in major loss because you didn't plan well in terms of putting all the money or a lot of money, then this level is your tolerance level. If you are conservative, then this could be your level. If you're super conservative, this could be your level, and so on. And it's not about conservative being conservative, it's also about the amount of profit you have, as I mentioned. So if you are not in profit, your risk tolerance is lower, right? That's also important factor. So all this together, anyway, so point is, if Bitcoin goes up and breaks above S4, then 42K and so on, then we have then it will hit this one with a higher probability, and this should give us the required breakout on the higher side, right? So to summarize all, to me right now, if I hide all these drawings, right now it's in perfect balance. But if it goes below, then it will change the balance and lean more on the downside. And one should not regret but plan right away. Okay. And you should have a plan, as an and I recommend, not a financial advice, always do anything buy or sell in increment if possible. Anything that anyone who does in and out with 100% is likely to regret in that decision. Always make decision in like gradual. um, if it rises, people think this is a huge move. If I have cash, I must put all your decision, because you are doing on assumption. And I would say the same mistake as seller would do, that you're assuming that it is never going to come back, right? So things like that. So both buyer and seller, if you do everything incremental manner, then I think you will see the difference in your trading style. I mean, it is much more um, manageable, and you will be able to absorb a lot of shocks with that kind of approach. Anyway, so at this moment, it's in balance, and I, as I shown to you, weekly weekly says Again, this is the third week I'm saying the same. It says I don't know what I want to do. This is what Bitcoin is saying at this moment. It says I don't know what I want to do. I'm Look at this candle. It's just moving horizontally. Don't look at the low and high. Look at the body of this candle. Don't look at the high and low. Look at this body. When you see this kind of body of a candle, it means it doesn't know what it wants to do. There's no clear direction. Okay, that it's swinging in a very narrow range, right? So this is how weekly looks like. That's why we want, if it breaks about this candle high, which is like 41k, I'm saying 42k, yeah, but 41, 42 range, I would say, then it will be out of this cluster, and 40, 47, 48k would give the required boost for the higher high. That's why those levels matters. And the same is true, if it starts dropping below this level and this, then the chance of going down will go up as well, right? So it's simple. If just think, you if you make the trading rule based, then it's simple. Trading is simple if you can make it rule based. If your trading is based on emotion, then it is the most difficult thing in the world, probably, because it will churn you inside. Like, it will really disturb you. I think it will just go beyond you. It will affect your family too. Let me tell you that. If you trade based on emotion, then it will affect your family. And I'm concerned more about that, actually. So this that's why, I think, go by your rule, go by your plan. And I would say start also tracking in a weekly manner, right, rather than daily. So try, if you're not used to with weekly chart, like I opened the weekly chart. If you're not used to, get used to, because weekly chart is important to understand where it stands, what it is doing, and so on, right? No one. So for example, ICP, I'm not big. ICP on a weekly is horrible, right, at this moment, because there is no sign of going up. But that's weekly. For a longer term, it has to improve. So you cannot put 100% money, for example, if you are a trader, because there is no reason for it to do, and so on. Any other coin which is doing better, maybe, I don't know which one was doing better. Maybe Solana was doing better. Let me open that one. Not in this week, but still better, and so on. So much better than other. It's also much better. Anyway, so different coins at different level, right? Anyway, so weekly, I think you better you start tracking it weekly, because that will give you clarity, a big vision. Yeah, it will help you. That's another recommendation. What else we should talk on a monthly? We should have a look at a monthly for a while, quickly. So the monthly is encouraging. Okay, this month is not over, but even if it month gets over in red, still it's encouraging, provided it doesn't break this level and continue moving up. Still okay. This is a sign that it is building a base and good defense here. But if you think, if it comes down, then you can expect another month on the downside. So this is also important from a candlestick analysis point of view, that if you look at this candle, the close of a candle is 37,253. Okay, in other words, if this candle has to reach to just above that level, close of this, so maybe 37 260 will make this candle green. So it's not far from that level, actually. Couple of thousand plus will make it green. And if the month ends
with a green candle like that. That's also encouraging for a longer term point of view. That means we are getting out of this mess, if not immediately, eventually. Right? So this is important that this candle turns into green by month end, and if it doesn't and makes continue going down like this, then the subsequent month, from candlestick analysis point of view, we might see lower low. Okay, so that's another important point. And because here that's what happened, there was a nice this is a doji. You look at this one, which is, the history doesn't repeat, but there is a comparing, sometime there is a good comparison. Maybe this chart doesn't show you the exact, um, yeah, maybe this has a longer history, so it makes more sense. it, I'm not saying both are identical. I'm not saying it will end up in the same situation, but this was the third month from the all-time high. This is the third month from all-time high, and it went up, but not so convincing. And then the subsequent month, it went down, and it never recovered. If you look at from candlestick analysis point of view, this was the high, and the subsequent month were they were not able to break above this level, and so that was a bad sign for sure. And then it kept on going down. The whole entire move, if you look at the whole entire move, 1 month, 2, 3, 4, 5, 6, 7, 8, 9 months were under the boundary of this candle. Let me- you see, this is the lower bound, and this was the higher bound. All these 9 months were under this candle, but what you observe is made a descending triangle, and put a pressure on the lower part, put a pressure on lower part, and then broke down. What I'm not saying it will repeat. What I'm saying is this candle has to make progress and go above. That's why I'm saying if it breaks above 747 48k level, which is this level, which is very significant level in my point of view, and then the probability of this kind of a scenario is lesser. 42k is a boundary line, but 42k will say, okay, you know what, we have time, we have time, we don't have to think about anything negative if it goes at least touches 42k. And during that time alts could do well as well, but what we really want is 48k, 47 above plus, and stay there, right? Anything, if it keeps on moving in this direction, then it's not good on a monthly scale. Hmm? So this is important, that it makes progress and breaks above 47k and 48k level. But here on our opportunity channel, you will get that guidance in terms of analysis, and so I don't think you will be surprised with any kind of Bitcoin move. Okay, see, alts you cannot predict, because alts are, they swing wildly, but still we cover them on our weekly analysis. But main thing is, right now Bitcoin is driving everything. So I can tell you that on a larger scale, you will not be surprised with opportunity channel in terms of what Bitcoin might do, right? Whether it goes up or whether it goes down, wherever, you will not be surprised. That's what my attempt is to make sure at least you will get that visibility, that what it could do and what levels are important. If you ignore what levels I'm providing, if you ignore the alerts, it's your choice, right? How you treat, I'm here to help. All right, and you may ask questions. So I think I covered the Bitcoin in very length, in length, and in pretty much in detail at all scales. And I wanted to touch base the traders aspect, investor aspect. I wanted to touch base. What do you mean by pricing? What do you mean by intrinsic value, by comparing the stocks and all? I think I just put together a lot of things together. for your planning. And also, as I touch base the mindset that you should be talking more about planning, not about regrets, not about past, and so on. And also I touch base the aspect that how why emotions are not required here, and it is actually requirement that not to have emotion, because it's not just about you but also about your family. So think about your family too, because if you are upset, it will affect your work, it will affect everything, it will affect your social relationship as well, family relationship, social relationship. It could spoil beyond your imagination. So I think sooner traders take out the emotion part from their trading, better for them. This is I'm trying my best to explain this, and I'm keep on repeating this over time, because whatever I read from chatter, I still feel that no, you are not there. Again, it's not a criticism, but I just feel as a person, as a human being, that you are still talking like sometimes tweeters, like Twitter, most of the those. I really want you to talk as a trader would talk, not like a speculator, not like someone who just. And I'm here. I'm spending a lot of time here. Um, so feel free to ask me questions. I'm here to explain, right? But yeah, so that's I think these are the key points I wanted to convey. I'll stop the recording here and take your questions.